Hello traders, Gary Wagner here, just about 9:30 in Honolulu, 3:30 in New York on Monday, 29th day of June 2015, and this is Trending Markets. We have a dramatic sell-off across the board in the equities markets. This began, of course, overseas. Global equities market selling off. China's market selling very hard. Right now, you're looking at a Dow Jones Industrial just off of the lows. I think we're looking at the lows off about 320, 325. Currently off about 1.76%, off 316 points with approximately 25 minutes left in trading. We are now at 17,631. As I said, dramatic sell-off in the equities markets. When we take them over to the S&P, of course, we have the S&P off about 42 points. Tremendous sell-off also at 2,053. NASDAQ also trading dramatically lower, as you can see from the E-mini that we just put up. It is off over 2% at 4381. It seems just a little while ago we were trading over 5,000 on the NASDAQ. Tremendous sell-off. Now, we've had extreme volatility across the board. We'll take a look at the euro and the dollar in a second, but the euro has had more volatility, or the most volatility, since 2008. Of course, traders, this systemic volatility right now is stemming directly from one small island, Greece, in which there is a higher probability today than, let's say, on Friday that A, they will not stay in the European Union, or B, they will default on the current interest payment, which is due at the end of the month in just a couple of days. We have seen the euro dollar all over the board. In fact, last night we saw the euro dollar trading as low as about 109. It's back to about 112, 112.38, putting it up on the day. It has been, as I said, the most volatile, the greatest range we've seen since 2008. A tremendous swing that we've seen during the day. And the outcome of what is going on in Greece is really anybody's guess right now. But talks have broken down. They continue to kick the can. The deadline is quickly approaching, and they are demonstrating in the streets of Greece. Traders, there's absolutely no doubt this has been a most interesting day that is developing. If we take a look, the first chart that I've pulled up, this is a half-a-day chart. And so we can see that the market is trading very flat as we go in towards the end of last week. It gaps open way down. This is therefore that gap that we saw in the market. The gap now at this point has been filled, of course. But we see this gap down. We see this market hit a low, as I said, roughly at 109. So a tremendous low. And from there, we have seen this market dramatically recoup. Now, the reasons for it recouping are still evading me. We still have a crisis going on, but apparently the belief is that the Eurozone can do without Greece. And in fact, if they default, that has been pretty much factored into the market. At least that's what this chart tells me. However, I don't think that the fireworks are over as of yet. So traders, the next chart that I want to look at today is the euro dollar, but a very short-term chart, standard candlestick format. We're looking at a 2-hour candlestick chart with our current Elliott wave count, MACD, and stochastics. Now, when we look at that, what kind of information do we glean? Of course, this is the sideways activity that we have coming up and into the open, which was, of course, yesterday morning here in Hawaii, Monday morning over in Europe. Market gaps down, and you can see this tremendous gap that we have in terms of a price void. Of course, that gap has absolutely been filled. In terms of our current Elliott wave count, though, and again, this is a very short-term count, our system was looking for it to possibly hit a high roughly at around 112.20, 112.10, 112.30, and at this point is predicting or really looking for it to now come back down, having hit this particular high and completing this third wave here. We would now be in a fourth wave down. a fifth wave down after completing this fourth wave up. So traders, my sense is that on a technical basis, we filled this gap right in here that was created on yesterday's strong gap down. We've seen that gap get filled. I think we've hit our target here. We've got our first real red candle coming in. In other words, it hit this high at around 11250, 11245, whatever the high is of the day. And my belief is that we should see some softening at this point, and the euro dollar losing some value as we continue on through this day and into tomorrow. Of course, as I said, anything can happen. The one thing that I absolutely was certain about on Friday is that we would probably see some fireworks. We are certainly seeing them today. So traders, when we look at the dollar, the US dollar, of course, we saw a very, very similar scenario transpire. And if you look at our current take on the market, we are looking at this market coming down and hitting our numbers right in here, which would complete a fourth wave down, and then we would move into a fifth wave back up. Very, very similar, the mirror opposite, of course, of the euro right now. When we take a look at how the dollar fared, you can absolutely see that a gap has been filled as the market. This is that really non-action as we go into the end of last week. We get this tremendous gap. The open is up here, as you can see. We get this tremendous gap open here. Market trades a little bit higher. Then it trades really to new lows on the session. And of course, we got that follow through with the last really 720 minutes, meaning a full day right in here, in which this market has been trading dramatically lower, off on the day right now. And whereas the dollar was up earlier in sessions overseas, it is currently trading off 59 points. Now, we've got that in conjunction with the fact that the S&P is under so much pressure along with the Dow. And as we go into the close, I believe we've got probably about 5 to 7 minutes left in trading on the day. It does appear as though we are going to absolutely close on the lows, close off over 300 points, dramatic down move. And the real question, and the question we're going to want to tackle over the next few days, is this the beginning of some sort of correction within the U.S. equities markets? Will we see these equities markets continue and have some follow-through selling as we have seen it begin today? When we look at the Standard & Poor's, the S&P, it's down about 44 points on the day. So we've got a lot of movement to the downside, off about 2% across the board in U.S. equities. We are short the euro. We are long the dollar. We had that market move dramatically in our favor, only to move out of our favor very, very quickly. And my suggestion is to maintain our current positions, maintain our current position in the euro, maintain our current position in the US dollar. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.